we could see markets then heading for, as we said there just in that link, heading for their first monthly decline of 2019. You see this as a buying opportunity. These dips are buying opportunities. Why so, Maria?
Yeah, good morning, first of all. Yes, we stuck to our guns since the beginning of the month. I said it's a buying opportunity. And I actually have to say, I mean, we have Trump tweet in the beginning of the month saying that trade war is open, World War III, tech Cold War, however you want to call, very, very dramatic headline. S&P is off, what, about 4%? 4%. So that to me doesn't sound very, very dramatic. I mean, the reasons for us to stay optimistic is that we strongly believe that pessimism we've seen at the end of last year is still in the market. Neither economists, analysts, investors have not fully came back to the market. And what we're beginning to realize gradually is that economic data is soft and earnings data is soft, but not disastrous. So we're actually priced for a lot worse outcomes. And we see investors coming back. Actually, we had quite a large marketing round recently. And the general sentiment from investors is we kind of missed the Q1 rally and we are getting back to it. And as the trade war news broken off, it was, I mean, most of investors, but they're looking for excuse to kind of not to get out of the trade.
We had Brandywine Global Investment Management come out with a call, and they managed $72 billion, not a small asset manager here, saying that Trump will be compelled to make a deal because of the prices that consumers in the U.S. are going to have to pay. And I thought it was interesting yesterday with Shinzo Abe, he did make that admission that, okay, U.S. consumers are footing part of the bill for these tariffs. Do you think Trump is going to be pushed to make a deal right when he says he doesn't want to?
I mean, it's very interesting. I think market and lots of investors are very convinced that there is Trump put, there is Fed put. And I think, I mean, I wouldn't probably go as far as suggesting there is a put in the market, but the link between financial markets and real economy are increasingly close. And both policymakers, I mean, Trump administration, Fed, are very focused on avoiding recession. And that, to me, is really kind of undermines why we have this support for the market, and investors really strongly, in our sense is that investors really believe that there is definitely support coming.
And let me ask you about the earnings story, Maria, because I know you like to go back to that when you're trying to justify what your investment case right now. I've got this chart, 6782 on the Bloomberg, and this is to do with the pace at which we're seeing earnings being downgraded, earnings expectations being downgraded. And actually, the pace at which analysts are trimming profit estimates is slowing. And this ties into one of the themes that you've been pointing to for a while.
Absolutely. That's actually a really nice chart, I should steal it.
You can go to GTV Go and you can steal that chart.
Oh, fantastic. I mean, it is generally kind of similar to our market narrative, is that consensus got extremely negative in Q4. Analysts are beginning to get less negative. I mean, if you look at year-ahead earnings forecast again, they kind of troughed around early spring, and they're beginning to come back. Very importantly, yes, we had earnings season that surprised on the upside, and analysts just beginning to pull up the estimate. So again, they're going into Q2, I mean, in a few months' time. Again, expectations are still extremely low. So this kind of overall pessimism is still in the market, and that, to our mind, is a support for the market.